Chamath Palihapitiya is one of today's most successful investors. Since 2011, the average annual return has been 30. He was a founder of Facebook and an early investor in firms such as Amazon, Slack, and Bitcoin. Hi, this is Fred, and today we will be going in-depth on Chamath Palihapitiya portfolio. Thank you for all the feedback on last video. If you haven't watched the last video of my Chamath Palihapitiya portfolio, you can check it out later on this channel. Chamath isn't your typical investor, so it's always fascinating to see what he has in his portfolio. If you're new to the channel, please consider subscribing for more stuff like this. And let's get started. SurveyMonkey. SurveyMonkey is an online survey platform that helps businesses to gather information about their target market. After firms conduct online surveys, anonymous people respond to the questions and get compensated. Some of us may not have heard of this firm before, yet many businesses we know utilize their services to obtain information on us. According to SurveyMonkey's website, 98 of the Fortune 500 firms utilize their services, and currently over 8,000 organizations use them. The industry that uses them the most is computer software, followed by higher education such as universities. In addition, companies can ask about various topics, from employee benefits to whom you vote for, to the number of times you dine at home each week. Surveys are unquestionably one of the greatest and most cost-effective ways for businesses to collect data. Because respondents are completely anonymous, they are more likely to reply honestly. SurveyMonkey, compared to other survey firms, provides a worldwide platform, an easy-to-use interface, and superior machine learning. Collecting data just from selected populations responding to questionnaires may appear untrustworthy. However, the opportunity cost of attempting to build more precise data collection methods must be considered. Surveys are the most effective method for contacting huge target audience segments since they need the least amount of time and money. Furthermore, SurveyMonkey has algorithms to determine if the individual is speaking the truth or simply pressing buttons at random. This might take the form of test questions such as click somewhat disagree, or just monitoring the consistency of the fact. Chamath was part of a social capital fundraising round in 2013. On September 26, 2018, SurveyMonkey went public, and the stock traded in the $10 to $20 area for a period. It is now trading on an upswing at about $25 per share. It has an 8.2 price-to-sales ratio and a negative 0.69 EPS. They now have a negative profit margin of 26.35%. And I discovered that 81 of the shares are held by institutions, while insiders hold 13.76. This leaves just over 5% of the shares held by others, such as individual investors. Before the IPO, Chamath was an early investor in SurveyMonkey. Chamath made an underappreciated and low-key move in 2017 with 5-year Tesla convertible bonds.
We are massively long the convertible bonds. Why the convertible bonds? Again, it's the safest and the surest way to basically bet on Elon Musk, who I just fundamentally think is the most important entrepreneur of our generation.
But you don't like the equity. You don't like the stock.
The equity represents tremendous volatility. I mean, if you put it on the screen, you can see it right there. And for our risk management, for the way that I want my capital and my partner's capital run, what I want is a mechanism to get 95% of the upside, 0 of the downside. And literally the bonds give you that. And so, you know, there's no need for me to sort of step out there, try to be a risk cowboy to prove something that we don't have to prove, because Elon has said to the entire world, hey, listen, you can buy the naked equity or take this other thing, which gives you 95% of it and no downside.
What's the coupon?
When we bought it, it was yielding 5%.
What's it now?
Now it's close to 0.
Well, what's the premium over conversion?
No, we bought it at like 87.
Would you still buy it at close to 0?
Yeah, because you get the downside protection.
Your call provision for the converts.
We own the ability to convert at a certain convert.
Can he call it at par? He can't. Because there'd be a force. You'd have to.
Yeah.
Force it. Really? You sure? There's no.
Yeah, no, joke.
There's no call.
It's an amazing instrument. It's an amazing instrument.
Tesla bonds. Convertible bonds are simply securities that pay interest to their owners. However, if the bondholder wishes, the bonds can be converted into common stock. In retrospect, this was a brilliant decision, although hindsight is 2020. What Chamath announced to the entire globe in 2017 was free money with little to no risk. Warren Buffett has repeatedly stated that an investor's goal should be to limit adverse risk while increasing upside potential. This action accomplishes just that. If Elon Musk and Tesla worked out, you could sell your convertible bond or convert it to shares for tremendous rewards. If Tesla did not work out and did not fulfill on Elon Musk's vision, you would be left with a standard bond yielding 5% returns. I am unsure if Chamath still owns the bond, but in any case, I am confident that he has made a huge profit on a substantial quantity of money. To the average investor, this means that we can buy these converts and we are guaranteed not to lose money as long as Tesla is worth at least $15 billion. Even if the equity goes to zero, we're protected because as long as someone is willing to pay $15 billion, we get all our money back. Opendoor. Opendoor aims to transform the real estate industry by making buying and selling houses easier. Purchasing a property is often a complicated, unpredictable, and time-consuming process. In addition, broker commissions, seller concessions, closing expenses, and other fees may add up to $12 to each purchase and sell transaction. On the other hand, Opendoor eliminates all difficulties for agents. The firm charges a fixed fee of 7 to 8% for purchasing and selling a house. In addition, the entire transaction will be paperless since the Opendoor will list their property on the market, and purchasers will be able to visit the home or view it online. If the buyer requests that the home be repaired, Opendoor will take care of it. The process of selling your home through Opendoor is relatively straightforward. After you've submitted the specifics of your house, Opendoor will compare it to similar properties that have recently sold. After that, Opendoor will find a recently sold comparable home and price it similarly to yours. Next, Opendoor will change the pricing based on the many qualities of your property. For example, if your property has one extra bedroom, the price will increase by a specific amount. Finally, Opendoor will make you an offer and send an agent to see your property. If you don't like the offer, you can request a reassessment in which the Opendoor representative re-evaluates your home's price. Opendoor has already had significant success in the first 6 areas it entered. It currently has a market share of 2% in 21 markets. Opendoor intends to penetrate 100 calls in the future, capturing 4% of the market share and generating $50 billion in yearly income. With just 5 million houses sold yearly and total market size of $1.3 trillion, Opendoor hopes to eventually enter the entire US market. In addition, Opendoors account for less than 1% of the real estate market, leaving lots of space for the firm to expand. Opendoor has had a lot of success in Phoenix in terms of margins. The Opendoor has a margin of 1.9 per house after all costs. This demonstrates that removing marketing costs and other expenses may result in profit. Overall, according to Opendoor, most of the properties they trade have a positive margin, and they have a lot of room for growth in other services. Escrow, house loans, improvements, and other high-margin services have been growing in popularity in recent quarters. Since its beginning, Opendoor's growth rates have accelerated, and its margins have increased. This margin will continue to grow as the company's credit rating improves, lowering the interest rate on home loans. Opendoor expects to generate $9.8 billion in yearly revenue by 2023. This results in a 5.5% contribution margin and a positive EBITDA margin. According to Opendoor, they have 4 times more house sales than their nearest competition. This opponent is most likely Zillow, which has also been involved in home buying and selling. Opendoor has slumped to the low 20s after going public at roughly $30 a share. Opendoor's market capitalization is at about $12 billion. Opendoor has a great value, in my opinion, right now, considering the poor profit margins of house purchasing and selling. Opendoor as a business makes a lot of sense as a long-term investment. Opendoor, unlike its competitors Zillow and Redfin, can focus only on purchasing and selling properties, giving its management team a competitive advantage. Personally, I'll be keeping an eye on this stock and may consider investing at its current market size of $6 to $9 billion. Let me know if you or anybody you know has tried or plans to try Opendoor in the comments. Golden State Warriors. Chamath minority invested in the NBA franchise Golden State Warriors in 2011. This was, in fact, a long-term objective. Chamath, a Sri Lankan Canadian, has made considerable progress in the Bay Area since joining Facebook and loves it. He was relying on the long-term prosperity of the Bay Area region when he acquired the Golden State Warriors in 2011. This long-term expansion would result in more fans and money for the franchise. Furthermore, Chamath trusted in the team's current management, their potential to improve, and the franchise's future success. The Warriors finished 12th in the Western Conference in 2011 and failed to make the playoffs. However, they have grown enormously in basketball and monetary success during the last 9 years. The Warriors were valued at $363 million in 2011, and they are currently valued at $4.3 billion. Though they may not have the same level of basketball success as they did from 2015 to 2018, this streak has assured Warriors supported in the Bay Area for many years to come. This demonstrates that Chamath has diversified his assets beyond the security business and that they aren't just any investments. They're investments that yield 10 times returns. He also has front row tickets to NBA games. Clover Health, or IPOC for now. If you've been following Chamath, you're probably aware that she enjoys SPAC and has recently done one with Clover Health. Because the transaction is scheduled to occur in early 2021, the stock will trade under the ticker code IPOC. Clover Health is a Medicare health insurance that uses its software platform Clover Assistant to disrupt the healthcare industry. They only have a few sites in Arizona, Pennsylvania, and Texas. Still, they do hope to grow in the future. I'll let Chamath explain what Clover Health is in more depth.
So what is this business? In the most basic form, what consumers need to know is Clover offers simple, obvious, and comprehensive healthcare plans for all of us. And so when you go to Clover Health and you sign up for one of their plans, what they also do is go to your doctor and give them very powerful software. That software is a combination of machine learning that takes all this heterogeneous data, clinical data, drug data, your lab results, your blood results, your genetic information, merges it together and allows them to give actionable insights and recommendations every time you see your doctor. That allows them to deliver better outcomes and lower costs. In fact, when you're a Clover member, you see 22% fewer hospital visits and 23% fewer ER visits. That is technology simply and efficiently improving everybody's quality of life. So when you have this kind of disruptive technology, the goal is to make sure that you're launching in a market that can validate it and then scale so that you can generate a lot of value. And this is exactly what they did. When you turn 65 in America, you have two choices. Number one is federally sponsored healthcare called Original Medicare, and number two is private insurance called Medicare Advantage. The reason to start in this market is that these are the folks that need the most help. They suffer the most chronic disease. Almost 7 in 10 have at least 2 chronic diseases. They rely on healthcare. They see a doctor at least 5 times a year. It is a daily use activity. And so by launching in a market like this, not only do you validate the technology, you get the benefit of some enormous tailwinds, which, as you know, creates for us a margin of safety.
Clover Health's goal in the Medicare sector, a fast-developing industry, is to produce more tailored data for healthcare patients utilizing AI. Chamath says that 10,000 people in the United States turn 65 every day. Clover's key strategy for expansion is through its extensive network coverage and low-cost plans. This enables them to acquire new data from new patients who join their network and integrate it into its virtual assistant, resulting in better and more efficient healthcare choices. As a result, they are now expanding at a steady rate. However, we must now consider their competition. This raises the question of whether Clover Health can withstand competition as they grow and whether its value offer is compelling enough to persuade patients to leave their existing healthcare insurer. When the CEO Vivek Garipalli purchased a number of for-profit hospitals and facilities in New Jersey, Clover Health began serving the elderly and low-income people. However, it won't be easy because they are a tiny company in a competitive sector. Some major corporations in this field include United Health, Kaiser Permanente Humana, and Aetna. These businesses might make changes to have Clover Health's value offer. Indeed, United Healthcare has taken a similar strategy with its subsidiary Optum Health and has been actively working to strengthen its business. For example, in 2019, they purchased the DaVita Medical Group, allowing them to provide complete clinical treatment. In addition, the advent of the MyScript Finder consumer application gives their consumers real-time access to reduced prescription cost choices and coverage status from healthcare behemoths at United. Finally, because of its established position in the industry, healthcare has a lot of cash flow. With this cash flow, I believe they will attempt to make additional large purchases in the future, as they have previously done, or improve their operations. We'll have to wait and watch how Clover Health does in this vast yet very competitive sector. This is similar to Chamath's second SPAC or Opendoor, both attempting to operate in significant marketplaces. So there you have it. 5 more of Chamath Palihapitiya's portfolio holdings. Of course, Chamath is not your typical billionaire investor, and it's always fascinating to see what he's up to. Let me know what you think of Chamath Palihapitiya and his investments in the comments below. If you like this video, please like it and subscribe if you haven't already done so. And I'll see you in the next one. Again, this is Fred, and thank you for watching.